Investing in stocks involves a lot. And of course, if you are an investor and you're looking to invest in almost anything, it's best for you to understand what you are getting yourself into. Now, if you're a beginner and you're looking to invest in the stock market, then please stick to the end of this video, because we are going to touch on important things that will help you in your journey to becoming a pro investor on the stock market. Once again, this is not a financial advice, and of course, before you go ahead to invest any money, make sure you speak to an expert, you do further research and understand what you are getting yourself into. What are stocks all about? Well, stocks represent shares or ownership of a company. Now, think about it this way. When a business gets to a certain level and they want more money to operate or expand their business, the board of that particular company can decide to take a portion of their ownership and give it to the general public. So people can now bring more money into the business and they can use that for their expansion or running of their business. Okay, this is mostly 10 or 20% of the entire business that is floated to the general public. The company will go through an IPO stage and after that become listed on the market for the general public to buy shares in that particular business. This simply means if you buy a share or stock of any particular company, you become a part owner. Maybe not as big as those who make decisions, but even as small as you are a part owner of that company. These days, investing in stocks is quite popular and almost everyone is talking about it. However, there are so many different ways you can invest in the stock market. And if you're not careful, you'll be copying wrongly and not understanding what exactly you are doing in the market. Now, these are the 4 different ways or methods you can make money from the stock market. The first one is to buy and hold. The second one is to profit from dividends. The third one is to speculate. And then the fourth one is to trade the market. Buy and hold simply means you are buying a particular stock and hoping that the price of that particular stock will go high. So if you bought it at $1 and then maybe in 6 months, 1 year, 2 years, or maybe 3 years down the line, it goes from $1 to $5 or $10, that means you are making money. So you can have a long-term projection. You buy now and then you wait for the longest time. You make money from it as that particular stock appreciates in price. With the second option, you are strategically choosing dividend-paying stocks or companies that pay dividends. This basically means these companies on a periodic basis will pay you a part of the profit they are making. That is away from the capital appreciation. Now, I'm using a lot of terms here. Let me break it down. If you invest $1,000 in one particular company or maybe across 5 dividend-paying stocks, okay, these companies are going to pay you on a periodic basis, okay? Now, the money that you have invested is still invested. You're not losing it. However, on a periodic basis, these companies are still going to pay you a part of the profit they are making. A lot of investors go for this because they are able to protect their capital invested in the market and watch it grow over time whilst they make more money from their dividends. So they don't touch their capital, but then they can now spend some of their dividends as they receive it on a quarterly basis or semi-annual or maybe annual basis. Okay. Other investors also choose to reinvest their dividends in the market. This is also a smart thing to do. It will help you compound and get more returns later in the future. The third way or method is speculation. Now, as a speculator, you are mostly looking for companies with high potential. Okay. Now, these companies that you believe, okay, in the next 5 years, they are going to 10x, they are going to 50x your return, they are going to boom, to the moon and all of that. These companies, mostly those who discover them or those who talk about them are regarded as speculators. Now, if you want to invest in the market as a speculator, it means that you're going to do your research to find companies that you believe in the next year, in the next 2 years, in the next 5 years, or even maybe in the next 6 months, they are going to grow exponentially. Okay, so you are speculating. Now, one thing to note is speculation is risky because it may disappoint you. So if you are investing as a speculator, you need to risk as low as what you are willing to lose. The fourth one is trading the market or being a trader on a stock market. This basically means you don't hold any assets. Now, as a trader, you are mainly concerned about if the price is going up or down. And in both ways, you can make money as a trader, unlike someone who has bought the asset and hoping that it actually goes up. For a trader, you don't care if it goes up or down. All you care about is your analysis is right. Okay. As a trader, all you care about is the movement of the market because you are putting your money behind that. You are not buying any asset. So if you think about it, if a trader goes to the market and then say, okay, today Google stock is going to perform, is going to go high, and then they place a trade from where it is and it actually goes up, it means they've made money. If they also say the stock is going to go down and they place a trade for a sell or a short, it means they are going to make money if the market actually goes down. So as a trader, you are not owning any assets. You are basically making money based on the movement of the asset or the stock. Okay, but for a beginner, I don't recommend you going to start from trading because trading involves a lot of risks and you may lose your capital. To even make it clearer, if you buy a stock and then the stock price goes down, you still own the share. It's just that you have lost some value. So if the stock price later appreciates, you are definitely going to get your money back. However, with trading, it's not like that. If you place a trade and it doesn't go in your favor, you lose the money. Now let's get back to investing. Okay, now for you to be able to invest in the stock market, there are a couple of things you need. One is a brokerage account because without that, you can't access the stock market. Okay, a broker is going to help you access the market and also help you get your money into the market to buy the stocks you are looking to buy. If you're in Ghana or Nigeria, you can download Bamboo. Bamboo is a great app you can use to access the US stock market, and of course you can pay through Momo, so it's a great option for anyone living in Ghana who is interested in investing in the US stock market. If you're in Nigeria, you can also access the Nigerian stock market on the Bamboo app, so of course you can download it, you can check it out. Okay, there are a couple of other options in Kenya, in South Africa and other countries across Africa to access their country specific stock market. Okay, now you can also check out eToro if it works in your country. It's a great platform. Okay, if you find yourself in the US, you can check out Robinhood. It's a great platform that you can use to also access the US stock market. Aside these, there are a lot of platforms that can help you invest in different markets across the world. As a beginner, always make sure the broker you're using is licensed to access the particular market you're looking to invest in. So if you're looking to invest in the US stock market and you're going to use Bamboo, research on Bamboo and understand the registrations they've done, the license they've acquired to operate, so you know that your money is safe. Okay, if it's in Ghana, do your research on the licensed daily members of the Ghana Stock Exchange. If it's in Nigeria, Kenya, South Africa, Cameroon, anywhere at all, make sure you are researching to understand that this company that I am going through or this broker I'm going to use is licensed to deal in this particular market. Now, as a beginner, you understand what stocks are all about. You also understand the specific ways and methods you can use to make money on the stock market. Aside that, we've also touched on brokerage and understanding how you can get a broker and then the broker helping you to access the market to buy stocks. Okay, in a later video, which I'll be tagging it here, I'll take you through a process that can help you gather the right stocks to invest in, specifically the US stock market. We'll be analyzing different indices which can help you know where the market is going to go. This will help you understand when to buy a particular stock or when to stay out of the market completely, even when to sell a stock and wait to buy at a later time. We'll be going through all of that. So of course, if you are new here, subscribe to the channel, like this video, turn on the notification bell so you don't miss this future upload. Okay, my name once again is Alfred and I'll see you in another video. I'm out.